my name is Andrew Fake, and I would like to welcome you to our second Minds and Money online global event, where you are one of 2,000 attendees who have signed up for this great show. The conference features high-level content, including fireside chats with the likes of Thomas Kaplan, Ross Beatty, Peter Grosskopf, David Caraballo, and Clive Johnson, keynote panel discussions on critical topics such as ESG, gold, and Africa, mining pitch battles, and our ever-popular 5 at 5 chat shows. All of our recordings are on demand in case you missed the live sessions, and the event is also co-located in conjunction with iMark Online. We'd like to thank our sponsors for the event: Kotoka, Digby, Dundee Goodman, the European Battery Alliance, IBK Capital, Invest Saudi, Knight Pearsold, Minavaro, Partners in Performance, Perspective Portal, Reality Check, SLR Consulting, Toronto Stock Exchange, and the Yukon Mining Alliance, as well as 120 sponsoring mining companies taking part. And also, don't forget, our meeting planner is open 24 hours a day if you're looking to schedule meetings with investors and miners. I hope that you enjoy the show.
Good evening, good morning, wherever you are in the world, and welcome to Minds and Money Pitched Battle. My name is Richard Morrow, Chairman of the Melbourne Mining Club. I'm actually coming to you from mighty Melbourne, Australia, and pleased to have the Minds and Money global audience there. Oh, mining pitch battle, it's fast, it's furious, it's a gladiatorial contest between 4 promising exploration and development companies. The prize, because this is a virtual event, we're going to have a virtual $1 million. Well, I was excited by it. Yeah, I like that. $1 million, virtually anyway. Minds and Money has assembled an impressive judging panel for this contest. Our team of 5 judges will be asked to pick which one of our explorers have what it takes to get $1 million investment in their project or projects. And the other explorers, well, we've got 3 minutes, just 3 minutes to pitch, and then we'll throw to 9 minutes of responses as our judges throw questions, the curly ones, $1 million questions at them. Well, let's introduce our talented pool of international judges straight off the bat. First up, we have Matt Griffin, co-portfolio manager in small caps with AMP Capital. Welcome, Matt. Next is Daniel Rickleman, a geologist and vice president with Zhaojin International. Welcome, Daniel. Angelina Mehta is a mining engineering background and is a director of mining investment banking at Laurentian Bank Securities in Montreal. Matthew Zabloski is founder and lead portfolio manager at Delbrook Capital in Vancouver. And finally, my colleague at Lowell Resources Fund Management, John Forwood, is a geologist and a lawyer. I've seen him invest $1 million and he's quite good at it. So 5 great judges, a virtual $1 million to pitch for. Bring on the first company. So let's make welcome Marco Roque. He's CEO and director of Cassiar Resources. Marco, your 3 minutes start now.
Thank you. So why invest in Cassiar Gold? Cassiar Gold has 1 million ounces 43101 inferred resource at 1.43 grams per ton. Already identified. The resource that we already have identified is flat-lying, near surface, almost no overburden to speak with, and we believe we have the potential to double easily to double in size that resource without changing the grade too much. That resource is located in the northern BC, in a safe jurisdiction, with full community engagement and support, and it's actually surrounded by amazing, outstanding infrastructure. We have Highway 37 bisecting our property. We have a 300 ton per day mill, which is built and permitted. We have multiple property access roads. We have a camp. We have 600,000 tons of tailings at 1 grams per ton. We have mine permits. And actually on the southern part of our property, we actually already have also an historical resource that is high grade. So in that sense, and just counting our 43101 ounces, we are undervalued on per ounce basis on the dollar per ounce of ounces on the ground, which is well below our industry peers as well as our competitors in our panel here. And more excitingly, we also have a world-class team that was assembled, throughout this year. We have people like Doug Kerwin, or David Rees, who is a structural geologist, for those who don't know, and orogenic gold experts. We also have James Maxwell from Sabina, and we have Steve Ledwin and Chris Stewart on the board, just to name a few. So we believe we have the potential to double our bulk tonnage resource, which is again a very high grade, considering there's basically no overburden and very close to surface, less than 100 meters deep, the majority of it. But more excitingly, 5 to 10 kilometers south of our property, we have a very high grade potential, which is 15 to 25 gram per ton material. These are high gold grading in quartz veins, and David Rees compares it to Barkerville, Caribou from Osisco, and Doug Kerwin compares it to Fosterville, and these statements are not taken light. So these systems are typically very high grade. They can keep going for long, quite deep. So in and on itself, we have a multi-million ounce potential, 5 to 10 kilometers south of our resource, surrounded by infrastructure and in a great jurisdiction. You can see here our resource that is currently being drilled. So it's open in multiple directions. You see how shallow it is, less than 100 meters deep, almost no overburden. And we're currently drilling to potentially increase this, hopefully doubling it, not necessarily this year. And then next year we're gonna go for the high grade gold and quartz veins that we have in our property. Again, orogenic gold systems, typically stacked. They can keep on going. The old timers only scratch the surface. We have actually produced 17, 21 grams in our property. We have an
That's your
historical
3 minutes up,
resource.
Marco. Well done, mate. That was fantastic. You almost got it all done there. Very good stuff. Good pitch. Matt Griffin, would you give Marco $1 million to spend?
Absolutely, Marco. Thanks for the presentation. Very exciting story. I've just got 2 quick questions. The first one, you mentioned the opportunity to double the resource from the current 1 million ounces. I'm just wondering what sort of time frame we should be expecting that drilling and that potential resource upgrade to come over.
For sure. We already start drilling. We basically drill 5,000 meters this summer. We're actually in the middle of releasing those results. So I think we'll do a resource update later this year, and we'll be well on our way to convert this 1 million ounces into or getting closer to those 2 million ounces that we believe is our target on our bulk tonnage. But we'll definitely lead, it's already quite evident we can do a lot of infill that to have the necessary basically density, as well as the confidence to keep increasing, and not only the size but also the confidence in our resource. So I would guess it will depend how much drilling meters we allocate to this part of our resource or this part of our property in 2021. But we're not planning to focus too much, because we're focusing on this 18 gram per ton material at the high grade gold and quartz veins next year. So I would expect maybe in 2022 we can turn this bulk tonnage maybe closer to 2 million, or achieve the 2 million, and maybe by that time we'll hopefully have a resource on a high grade south part of our property that matches hopefully in size, given that we're planning to drill 15,000 meters on the high grade on the south part of our property.
Great answer. Daniel Rickleman, you got a question here for Marco.
Yeah, Marco, a couple if I can. What's the current market cap of Cassiar?
26 million Canadian dollars, so $26 per ounce on the ground, ignoring any exploration upside.
And what's, in terms of your drilling programs and your plans and where you're looking to get to that resource update, how much cash have you got at the moment to do that?
Yeah, so we're fully financed for next year. So we have roughly $7 million in the bank. We already completed 5,000 meters at the bulk tonnage, and we're fully financed for the 15,000 meters for next year. Okay. For the high grade.
You mentioned there's tailings on the property. Is there any big environmental rehab liabilities or anything funny like that?
It's tailings are always a potential liability, but right now we are doing all the environmental assessment work and continuing monitoring to make sure that that we keep compliant and that this asset doesn't turn into a liability.
Okay, cheers.
And Angelina, does this project excite you at all?
Yes, but I have a few questions. Let's talk about those tailings quickly, Marco. How many ounces were pulled out of this project historically? And then again, on the tailings, if they are not a liability, they're an asset, how big of a role they're playing in your strategy? In other words, are you going to mine them, and when?
Yes, so the southern part of our property has produced 350,000 ounces. This is a high grade. You can see the grades here on the bottom, 17. Most of it was, around 20 grams per ton. And that's the reason why we have all the infrastructure that surrounds our project, the highways, the roads, the mill, the camp, everything. So the tailings have 600,000 tons. They average 1 gram per ton. In the short term, we don't have any plans to put them in production. Given we're looking at roughly like 25,000 ounces there. I think given we're a small, relatively small company, I think we have a lot more upside by turning these 70,000 historical ounces into 500,000, 1 million high grade ounces at hopefully keeping the same grade, 20 grams per ton. So it's definitely an option that we have as a company to monetize those tailings, but ideally we want to process them along when we have a much bigger resource endowment, hopefully a much bigger high grade resource endowment as well. And we're looking at a much bigger production profile than we will be discussing now.
That's good. Thanks for that. Thanks for that question, Angelina. Matthew Zabloski, Delbrook Capital, is that the sort of stock you'd look at?
Yeah, potentially. Marco, thanks for the presentation. I guess my question really is more on some of the engagement. Do you have an impact agreement in place with the Indigenous people there? And a follow-on is, when was the last time an open pit mine was permitted in Northern British Columbia? Thank you.
To the second question, I'm not quite sure. I'll need to check. But in terms of the agreement, we have a very positive and constructive relationship with the First Nations, and we're basically right now negotiating and advancing an exploration agreement that will lead into like a IBA agreement with the local First Nations, and this is the Cascadene. This is the same ones that are their more traditional territories. Actually, the Yukon. There are several mines under their territory, including a Silvertip mine from Kerr.
Thank you.
John Forwood, you got a question there from Lowell Funds Management. John, we got you on.
Apologies. Sorry. Can you hear me? Yeah, I just wanted to know about the metallurgy. Sounds like the old mining had some good recoveries. Have you done any work on the bulk tonnage zone?
Yeah, for sure. We actually have several. This is the mill, right, by the way, that's built there. Yes, we've done some metallurgical studies. So we have two types of mineralization on our bulk tonnage. So the high grade, the old timers were processing, north of 98% in terms of recovery. But this was 20 gram per ton material. Then on our bulk tonnage part, of our property, so 1.5 gram per ton material, the mineralization is quite good. Over 95% is free milling, less than 5% is refractory. The refractory obviously has terrible metallurgical recovery, but again, it's less than 5%, and our studies put it on a very conservative basis, looking at high 70s or up to 90s in terms of recovery for the bulk tonnage part of our resource. The high grade we can expect to achieve at least the kind of recovery that the old timers in the 80s and 90s were having, which is north of 97-98%.
Wow, great work there, Marco, and finished right on the button, and some great questions there from all our judges. They're pretty thorough grilling there, covering everything from the grade, the METs, the permitting. Wow, great presentation, tough act to follow. But now I'm going to throw to our next presenter, Alan Carter, CEO of Cabral Gold. Alan, your 3 minutes starts now.
Thanks very much. Okay, I'm the CEO of Cabral Gold, and we have a gold project in Brazil, and we're targeting the high-grade potential of this project. I think the things to bear in mind when you're trying to make a selection with a junior company are management, the capital structure, jurisdiction, who the neighbors are, what your asset is, and what the nature of the upside is. And I'll talk very briefly about all of these things. On a management side, we've been involved in 5 gold discoveries in Brazil in the last 20 years or so. We've invested quite a lot of our own money in this company. We currently own 17% of the issued and outstanding shares. I myself have put in $1.7 million so far, Canadian. And we also know how to transact. We sold our last company to Ross Beatty. That's now part of Equinox. Capital structure side, we've got just under 120 million shares out. We've got $6.2 million in cash. You can see what's happened to the share price in the last 6 months or so. Institutional base is pretty good, 40%, and they include Phoenix, Crescat, Dundee, RBC, and a Cisco. On the jurisdiction side, as most of you know, Brazil has a well-developed mining industry. Kinross, Anglo, Yamana, London, and Equinox are all very active here. The Brazilian real has hit a 10-year low a few weeks ago against the Canadian dollar, and we have a 12-month field season. Now, the Tapajós area that you can see in Pará State is the site of the world's largest ever recorded gold rush. And our project, Cuiú Cuiú, was the #1 placer producer during the time of over 100 different areas. So if you zoom in on that, this is our neighbor. We have a very important neighbor in Eldorado Gold. They have a fully permitted 2.3 million ounce project right on our doorstep. Their areas are in blue, our areas in pink. Significant thing about this is that during the gold rush days, their area produced 200,000 ounces from the placers. Our area produced 2 million ounces from the placers. So if that's any guide, the historic placer production, there should be an awful lot more gold here. As I said, it is a district. As I said, we already have a resource base, much like Marco. We have 1 million ounces already drilled off here. The significant thing about this is that our most recent resource update in 2018 had top cuts imposed on it of 2 to 20 grams a ton. Eldorado's project next door was 25 grams a ton. As a result of them fairly conservative top cuts that were imposed on this, there's 535,000 ounces here indicated by the drilling that's not included. The 2 deposits that make up that resource currently explain about 10% of the placer gold. So the question is, where's the other 90% of the placer gold coming from? Now, upside's key with all these sorts of companies. And in our case, we have 8 other targets with some drilling already defined. And we have high-grade drill intercepts. You can see them there, 3.5 meters at 36 grams, 6.9 grams over 27 meters. And beyond those 8 targets, there's another 20 or so. We have 2 rigs that are currently active, 25,000 meter fully funded program in process, and we're drilling 10 to 15 targets over the next 6 months.
Hey, that's your 3 minutes. Fantastic work, Alan. Right to the money, and what a good story it is too. And you had a pretty hard act to follow there too. So great work, Angelina Mehta from Laurentian. Gold in Brazil, does that get your mill?
Well, I like Brazil, and Alan, thank you for that presentation. I guess my first question is around your labor force in Brazil. Do you have local talent helping you move this project forward? And is there anything that you've had to worry about with regards to COVID and what we've been hearing in the news and spread in that country?
Yeah, good question, Angelina. We have a team of about 25 people here. 24 of them are Brazilians. And one of them is an Australian guy who's lived in Brazil for last 20 years. On the COVID side, there was a small village near us, a small community, about 500 people. It's not an indigenous village, but we run the health post in the village. And so we've been testing the whole community, regardless of whether or not they're employees of ours. So we track the evolution of the pandemic. We shut the project down for 3 months earlier in the year, and the cases in northern Brazil have dropped right off. So I think the last case we had in our community was in September.
Thank you.
Matthew Zabloski, what did you make of all that?
It's a great story. Alan, great to see you again. Thank you for taking the time. The question I really have is seeing if you can quantify, the impact of the real. For us, it's always great to find, companies who are able to take advantage of not only resource expansion, but also the cost for you to discover more ounces. How material is the implosion of the real for you?
It's very important, Matt. I mean, in the last 12 months or so, the Brazilian real has devalued about 20 to 25% against the Canadian dollar. We're raising all our money in Canadian dollars. So we're sending Canadian dollars into country. So it gives us about 20 to 25% more purchasing power. All our drilling costs, all our fuel, all our support costs, all our labor costs are virtually all of them anyway are in Brazilian real. So it's we're getting a lot more bang for our buck than we did 12 months ago.
So Alan, just to follow up on that quickly, you're getting more benefit from a lower real versus inflation as you would see it in Brazil.
That's right, a lot more. Yep. Okay. Yeah, you're right. Inflation's moving too, but it's not moving anything like as fast as the devaluation of the currency.
Great, thank you very much.
Daniel Rickleman, have you got a question there?
Thanks, Alan. Just on the gold, the style. So you're quoting quite a low grade resource, but you're also saying you've got a lot of visible gold, historical placer deposits. So, what kind of deposit is it? Is this going to be a bulk mined thing, or is it high grade, narrow vein? And are you estimating this all together? I'd be a little bit concerned about, the resource estimation error in smearing these high grades in such a low grade estimate.
Yeah, good question, Daniel. The granite hosted deposits, they comprise of narrow, high grade veins up to 10 meters wide. Most of them are narrower than that. About 2 meters is pretty average, but they're surrounded by these very wide halos. And these halos are generally a gram to 1.5 grams, and they extend 50 meters either side of these veins, the narrow veins being the principal sort of channel way for the gold-bearing fluids. So part of the issue with the current resource is that the high grade and the low grade material is lumped together. And when you do your statistical analysis on this, the high grade stuff will appear as outliers. And so that's the main reason we've lost 535,000 ounces from the resource. So the work that we're doing in the next 12 months will separate out the high grade zones from the low grade zones. And so we should have two components to the resource.
Okay. And just the market cap quickly.
It's about 70 million.
Okay, top.
That's great. John Forwood, gold in Brazil. Is that our thing?
Yeah, possibly. Alan, great presentation. Just like to know a little bit about the area and operating. Those big placer deposits can be pretty Wild West frontier areas to operate. What's the access like? What are the, what the costs like? Be interested to know your all up drilling costs.
Yeah, there's quite a few things in there, John. So the all-up drilling cost, last year we drilled diamond drilling, and the all-in drill cost, including the analysis, was 237 Canadian a meter. Sorry, 247 Canadian a meter, including analysis. This year we're drilling with RC, so it's a lot cheaper. One of those two rigs is ours, and so the all-in cost for that is about 25 to 30 Canadian a meter. So it's it's much better in terms of the sort of the region itself. Obviously, there was a big gold rush that happened here 40 years ago. Like most gold rushes, they blow themselves out, and there's about 50 or 60 guys still panning a little bit of gold in our. We've got a huge concession area here. It's 360 square kilometers. So the sort of the placer rush is really just is virtually nothing right now. In terms of access, there are 5 known gold deposits within this district so far, or within this whole region. There's it's virtually unexplored. 2 of those are in production. As a management team, we've been involved in the discovery of 3 of those. So access, pretty good road access. There's dirt roads here. The infrastructure is improving year by year, and it's mainly being driven by the soybean industry, actually.
And security, you're able to, get around without any protection?
Yeah, no, there's nothing like that. No, we don't need any protection. We've never had any sort of issue like that. No.
That's great. Good questions there. Matt Griffin at AMP. Have you got a question here for Alan?
I do. Thanks, Alan, for the presentation. Appreciate your time. Just interested in sort of a bit of a history on the project. How long have you held it for? Who did you buy it off?
Well, we first identified the project probably about 15 years ago, and we formed a company. We made 2 gold discoveries in Brazil, and this was one of those. The project basically got frozen in 2012. In 2012, when the crash came in, we didn't have enough cash to advance both projects, and so we focused on a much smaller project that was higher grade and was a vein, and we could get a teeth into that. And so this was basically put on ice. And then you fast forward from 2012 to 2016, bear in mind there was no work done after 2012 on this project. And at that point, that company was then bought by Ross Beatty. He had a company called Anfield, which he merged with Trek and Newcastle to form Equinox, and he bought our last company. This project got cut out into a private company, and so we ultimately took that private company after a few months public about 3 years ago. So it's had quite a bit of previous work on it. Interesting thing about this thing really, Matt, is that if you compare it with Eldorado's project next door, as I said, there are neighbors, if the ratio that they have on their project, which is for every placer ounce, they have 10 ounces in the ground. If that ratio holds for this project, this district could contain 20 million ounces. Now, let's say I'm half right, it's 10 million. If you like, half it again, it's 5 million, but there's just so many areas here with high-grade boulders, or we've already done a little bit of drilling. There's just going to be multiple deposits within this particular claim block that we've got.
Excellent. Thanks, Alan.
That's great. Oh, thank you very much for that, Alan. That's a tremendous presentation there. Gee, the quality's getting up there. I don't know how we're going to separate everyone in this, but that's the judge's job, and we'll be coming back to them at the end of that. Okay, that's Brazil. Now something closer to home for some at least, the mighty Yukon. Our next pitch is from Tara Christie from Banyan Gold. Tara, your 3 minutes starts now.
Thank you very much. Great to see you, and thanks for having me join this panel. Just getting my screen up. So Banyan Gold, we have 2 projects in the Yukon. We're starting with over 1.1 million ounces in the inferred category and 200,000 in the indicated category. Both of our projects are importantly road accessible, potentially open pit heap leach mineable projects. They both start on surface. So that is a project, and that's significant because you can permit, you can finance, and you can build heap leach projects in the Yukon. So similar to the other companies, we've got many of the attributes that you should check off when you are looking at junior exploration companies, and there are lots of them out there. Management. Our management team has a track record of success taking things right from discovery all the way through to feasibility study and even financing and building projects in the Yukon. We're very closely aligned with our 2 largest shareholders, Victoria Gold and Alexco, and our discovery cost is amongst one of the best. That initial resource at Ormac cost our shareholders less than $2 per ounce in exploration cost. We believe our project has multi-million ounce potential, and we've set out to show that, and we're off to a great start with that maiden resource that we put out this May. Being next to adjacent mines, Victoria Gold that has over 6 million ounces, Alexco, which is a very large silver district. The system that created the gold on our Ormac and Nitra properties, it's the same system that created the gold at Victoria Gold. It's a very long-lived multi-phase system that bodes well for us finding more on our property, which is tremendously underexplored. We have infrastructure, amazing infrastructure. A highway goes right beside and between our 2 deposits. We have have all-weather roads. We even have cell phone access, and the main power line actually transacts our deposit. So very exciting, and the government just upgraded that power line. It goes right to the hydroelectric dam. It's a safe jurisdiction. Mines get permitted in a timely manner. We're right beside two, one which was permitted in 2018 and built in 2019, commercial production in 2020, and another that's going into production. They just got their license this year, and they're already going into production. So that's evidence that you can actually do it in this jurisdiction. We're financed through 2021. And I think you'll see we're undervalued with tremendous upside potential going into 2021. So the evidence that sub-gram is actually mineable in the Yukon is Victoria Gold's Eagle mine. Their life of mine grade is 6.3. I think you'll see lots of comparables with our grades. We have a low strip ratio, likely around 1-to-1, great infrastructure. You can see in the image the fabulous infrastructure. Those are the highways, the power lines and roads. Not a lot that you have to build to access our property. It's just a 40-kilometer drive to the town of Mayo and the airport there. Looking forward, we're continuing to build ounces at our airstrip, power line, and Oryx Hill targets with lots of other targets on the property. We're actually drilling today. People think of the Yukon as cold, but we've got another 2 weeks at least of drilling in this year, and we'll start up again in March, maybe even February, for 15,000 meters, which we're financed for next year. Lots of results will be coming in through the winter. We'll probably get the results from the 10,000 meters that we drilled into next March when we plan to resume drilling. I showed the long section on the bottom because it's our power line deposit. Important to note that power line was a brand new discovery in spring of 2019, just last year. And then we financed in October to drill out that resource. And just with 14 drill holes, we already have 129,000 ounces at 0.61. And you can see from the new holes, which go off to the left, which is the south, that we've now extended that mineralization by over 500 meters. So this is a very, very large system, and we've really just started to tap into it. It's open in all directions.
Got to stop you there, Tara. Got to stop you there. The rules are 3 minutes only, and you did brilliantly there. Oh, you got your last slide in. I always like that market cap one. Thanks for that. Thanks a lot. Well, judges, let's have another good look at this. Daniel Rickleman, what do you think of that? And have you got any questions here for Tara?
Yeah, thank you, Tara. It's really interesting. Just as you drill these out, drill these and extend them, what's the strip ratio likely to be? And is it going to be getting worse as you extend them? What does it look like?
So we've really focused on the near surface. So we haven't really been drilling at depth because of strip ratio. Right now, if you look at our 3D model, it's looking very similar to Victoria, sort of a 1-to-1 ratio. We haven't actually done a feasibility study yet, but we can guess that's about where it's at right now.
And the metallurgy, you've done test work and it's all comparable?
So yeah, our early met work is very comparable to the early met work at Victoria Gold. We're actually using Forte Dynamics, the same company that Victoria Gold is using to do their metallurgy work. We've done 2 dedicated metallurgical holes. We're doing some bottle rolls on all our pulps. Some of the historical bottle rolls are right on par with what Victoria Gold was finding in the early days.
Okay, and your current market cap?
Around 35 million.
Okay, top.
So some of these market caps are really in our target area there. So great questions and great answers. John Forwood, have you got a question there for Tara?
Thanks, Richard. Yeah, Tara, great presentation. Just following up on the metallurgy, I assume you're looking at a heap leach operation, and if so, just wondered how the initial stages are going at your neighbour at Victoria Gold with their heap leach project.
So their grade reconciliation is actually going well. Their average life of mine recovery was 74, and I know that they're both getting some higher grade material as well as some better recoveries than were predicted. I think some of their challenges were with stacking equipment, and they've certainly worked on resolving those and getting tons to the pad. So that was purely mechanical and engineering challenges.
Thank you. Thanks for that. Angelina Mehta, does the Yukon take your eye?
I think it does. I have a couple of questions, Tara, on your shareholder base. You have a very interesting mix, which includes 3 companies, Cisco, Victoria, as well as Alexco. And I think you have a little bit of Sprott in there as well. Tell me how that works. Is there some competitive tension around there, or is everybody amicable?
Well, you know, the whole idea is that there likely could be some competitive tension. Right now, we're trying to get everybody working together to help us to advance this project. Both Alexco and Victoria bring tremendous technical expertise for knowing the district. They've both built heap leach mines in the Yukon, though, too. So I think that's also a little bit of a check and balance, that neither one of them is going to be able to walk away without with our asset or our company without paying fair value. And same with the Cisco development. You know, they do not have a royalty. They invested purely on their technical merits and their belief in this district and our property and our management team.
Thank you.
So are you talking heap leach down the track if you get that far on that one there, Tara?
Yes, we believe this would be an open pit heap leach mineable project, very similar to Victoria Gold's.
Thank you. Thank you. Matt Griffin, the Yukon is a long way from Australia. Have you got a question there for Tara?
It sure is. Thanks very much, Tara. One for me, just the grade of the project's low-ish compared to some of the other presentations we've heard. Just interested, does that necessarily mean this will be a high-cost operation, or are there offsetting factors to think about?
I think there's quite a few other factors to think about, including our exceptional infrastructure. You know, it's going to cost a couple $100,000 to get connected to the power grid, not the millions it costs most other companies. You know, we've already got the roads infrastructure there. We do have a heap leach mine just down the road, and their grade is 0.63. Our grade's pretty comparable. If you increase our cutoff grade by 50%, our grade goes up to 0.65. And it still maintains as a pit-constrained resource. So I think we can find higher grade, and we've demonstrated that in the results that we've been finding this year, including 68 meters of 1 gram right near surface. This is very early days for this resource, so I think that's important, that we think we can both increase ounces and grade at this project.
Thanks.
Thanks for that. Matt Zabloski, closer to home for you than Brazil, Delbrook. What does Delbrook think of this?
Yeah, I mean, one thing that always scares me is cold weather heap leach and what that means long term. I know we've seen some of your peers up there have some challenges, so maybe run me through the cold weather heap leach. And my second question for you simply is, having seen exploration in Northern Canada before, exploration budgets can be very, very expensive. What are you running per meter, and you know, how can you find more efficiencies there? Thank you.
So yeah, our all-in drill cost has been about $220 per meter. So we're certainly pretty low cost. We are road supported. So, you know, a lot of these northern companies need helicopters, which adds cost exponentially because, you know, we're a couple 100 meters off the highway with what we're drilling right now. That certainly keeps us low cost. In cold weather heap leaching, Kinross really has led the way on that. They're stacking year round at the Fort Knox project. That's certainly a great example of Victoria Gold's planning to be stacking year round. It is a technology that's known, and it is something that you can do. So cold weather, if you're set up for it, is actually something that, well, Canadians are used to doing mining in the cold weather. My crew's out there drilling. They were drilling at -35 10 days ago, and they're thankful it's warmed up to -25, but they're actually getting amazing productivity right now with -25.
Thank you.
Well, you wouldn't get me outside in those temperatures. not even you know, even close to it. But thank you very much, Tara. Great presentation. And now, last but not least, we're going to head south of the border to Mexico with Glenn Jessome, President and CEO of Silver Tiger Metals. 3 minutes only, Glenn, to tell your story. Let's get into it.
Well, I'm going to ask the first question everyone should ask. How long have you been in the jurisdiction? We've been in our jurisdiction out of Halifax, only Mexico, for 25 years. How many mines have you built? We've built 3 large mines. How many have you sold to majors? We sold 2, the last one 2 years ago in Mexico to Agnico Eagle. We've raised $1.6 billion in that period. 1.1 billion was from BMO Capital Markets. We have a market cap of about $100 million. We trade about, on average since July, 800,000 shares per day. We, excuse me, Our technical team owns 15% of the company. I'm the largest shareholder, own about 5%. I've paid $2 million of my own dollars for that. I'm a securities lawyer. My job is to build the public companies for our group. There have been many. And when we raise the capital, and in the end, if we sell it, we need to do that work. I'm on the national advisory for the TSXV. That's the only place I do those deals. Secondly, funding. This summer in August for our project, and we'll get to that in a moment, we were offered $25 million from Eric Sprott and 8 institutions. We ended up only taking 11. I turned down 14. It wasn't the right valuation for us. Eric took 4. The other institutions got about a 30% fill. Sprott Asset Management, Ixios, and Merck were 3 of them. We are, since July, 4 banks have launched analyst coverage on us. We're trading at 40 cents. Those banks, Stifel, Echelon, Beacon, and Red Cloud. 2 more will launch before the end of the year. Their consensus pricing for us the next 12 months is $1.30. BMO Capital Markets wrote the first note on us a week ago. Let's talk about the asset. You have a clear picture of what the company looks like. Hopefully I can get a share screen going here. While we're waiting for that, we acquired in 17 at the bottom of the market, basically this asset, which was Silver Tiger. There we go. You're looking at it there. So that 30,000 hectares, 35 kilometers of the Sierra Madre, 25 of it runs right through it. You can see there everything that we need, water, power. We've already proved this is an economic deposit. In our time there, we a little more paperwork to do, but right here in the center, what you're seeing is the old El Tigre mine, 100 million silver equivalent ounces. We drilled off a 1 million ounce open pit resource around that old mine in a first pass. Those same veins continue to the north. All of it's hosted in 150 meter wide gold halo. Our drilling, 3 drills, currently drilling 85 meters already done this fall. And we're drilling our last press release, 10 of the first holes in that program. 4 of them were multi-kilo. We've drilled as much as 10 kilos over a meter up there, 7.3 real silver. High grade silver veins and a wide 100 meter wide gold halo open pit. And then these systems go for great depth as far as a kilometer. That's my 3 minutes, I think. So I'll take questions.
That's very good. I love it when you run to time there, Glenn. Can I quickly ask there about turnaround time for samples at the assay labs?
You know, I'm going to be careful what I say about my peers. There's been a lot of talk about big delays there. Look, we've been there for 25 years. We've drilled almost 2 million meters of core. When we show up at the assay lab in Hermosillo or Chihuahua or wherever we get the work done, we've had no delays whatsoever with assays. And I know there's a lot of that coming out of Mexico now. None.
Yeah. No, great answer there. Yeah, it's all about experience, isn't it? And all about relationships, and they're very, very important. Wow. Yeah, Matt Zabloski, is Mexico on your shopping list?
It really depends where in Mexico. It certainly makes a big difference. Can I just ask about the global resource, maybe some more details on the categories, and then assuming we're focusing on both exploration and infill drilling, your path towards a PEA?
So that's a very good question. First of all, we're in Sonora. We've built mines in Sonora and Durango. We're 80 kilometers from the U.S. border. We own most of the land, plus the mineral rights, as I told you. We're remote. We have no issues at all with any type of security. Matt, what we had there, I think, on that old mine, I think it's important. The old El Tigre mine, 100 million silver equivalent ounces from 1908 to 1930 at an average grade of 2 kilos. We did a first pass around that mine, the high grade already gone. From surface, that wide El Tigre structure, about 150 meters deep. We just took probably about that first 1 million ounces, almost a gram. Beautiful stuff. But we didn't drill the veins to the north, just to the west. We're going to get our 4th drill is going to start there in January. We see that resource going way up when we finish without the high grade. We see moving towards PEA by the summer. That's our plan. We've delivered our team 6 PEA-like studies in the last 5 years in Mexico. We're very talented and skilled at that. We're getting about 90 million of a NAV on that asset first pass. We think that's going to greatly increase towards 200 by summer with better grade from surface. But really, the story is to the north. That was 1.5 kilometers, the old mine. We're 3 kilometers. If you look at our verified presentation, those veins continue, and we're drilling all across that, and we're hitting the multi-kilo silver hits, and we're starting to see that same wide gold alteration zone. That's the real prize here. Always underpin our value with that first pass resource around the old mine. Look, a lot of people are comparing us to Silvercrest. When we bought this, we knew what it could be, a large low sulfidation epithermal system, high grade silver. We've got a lot of work to do, but make no mistake, these are the same. Silvercrest, 95 kilometers from us. These were old mines that closed in 1930 when silver went from $1.33 to less than 20 cents. Eric Fear dusted his off, rest has been history. He's drilled around that old mine. We're just getting going on that, and we're pretty excited about what we've seen so far.
That's wow. That's good questions there, Glenn. Do you suggesting you've got an LT grey by the tail? Are you?
Well, yes, that's not the first time I've heard that, but thank you very much for bringing it up again.
Well, you did tell me to. Yeah. Angelina, what do you think of the LT grey?
Well, I'm hearing a lot of experience and confidence from you, Glenn. So thanks for your presentation. One of the things that caught my ear as an investment banker is that you turned down $14 million during your last financing. So can you maybe talk about that a little bit more, the amount that you did raise, the 11, how far that's going to take you, and what your expectations are for the next raise at what valuation?
Well, it was a funny story. I'll tell you right now. We were moving along beautifully. We weren't going to drill until September. We've been there so long. We don't drill in rainy season in the Sierra Madre. We were preparing everything, get our camp ready for COVID, completely COVID proofing it, bringing in the medical staff. We got 75 people on the mountain. And I wasn't going to raise money till the end of August, but kind of got cornered on a Friday night at my cottage by those institutions and Mr. Sprott, and they offered the 25 million. And it was a hard negotiation. It was too much for our valuation at that time. We needed to get that drill bit turning north. That's going to take our evaluation for the raise we'll need to do next year, not now. We've got about 8.5 million left. We've drilled that first 8,000 meters. You're going to see those steady results starting to come out. The first drill holes came out a week ago, 10 holes. As I said, 4 of them over 1 kilo, 1 over 2 kilos silver in those narrow veins, and the zone around it. We're ready for the next 15,000 meters. Mexico will shut down on December 10th. Anybody who tells you it won't, it will. And we'll get back drilling January 15th. The country shuts down for that big Christian holiday, as you know. And we're just going to go hard for that with 3 drills right now. The 4th drill is coming back in there from that first question. It's going to get in around that old resource around the mine. That's only going to be working and banging ounces in and cleaning up, going towards PA in the summer. The exciting part, that's the underpin value, which covers what you're betting on this. The big one is, do we have another LT grade untouched just to the north? That would be incredible.
Great question and great answer there too. John Forwood, Mexico, does that grab you?
Sure. Thanks, Glenn. Just interested to know if you see yourself, just in terms of the resource, do you see yourself as a silver company or a gold company, or do you think the revenue streams are going to be roughly 50-50?
The old LT Gray mine was in 1896, a gold discovery, which quickly turned into a silver deposit. And basically that was about 80-20, but the old timers only wanted that meter. They didn't want anything in that halo around. So what you're seeing here from surface, all of this is at surface, guys. We walk on the whole thing. Most of these holes, as you look in our press releases, 50 meters down, we're intercepting those high grade. In the veins, you're going to have 80-20, silver, gold. And then when you get out where that dissemination takes place in that great plumbing for the first 150 meters, as wide as 50-60 meters on each side of the vein, it's all gold. So you've actually got both here. And it's hard to tell that story sometimes. People say low grade gold, but forget about the silver. So there's going to be both here in this deposit, 100%.
Okay. And your current ownership of the project?
We own that project. I showed you, we own it 100%. The beautiful part when we came to acquire it, and look, we proved to ourselves already we're moving towards economics. Not only do I own the 30,000 hectares, the mineral rights 100%, but I bought the middle 6,200 hectares about a year ago. I paid 1.1 million. The rancher was willing to let us go. The nice thing here, no ejido, no native peoples. Our first project we've ever seen that, all ranch land, and we have agreements with all the ranchers for the full 30,000 hectares, plus I own the middle 6,200. The last part was so nice, and we've never seen this. Usually when these things get put back together in Mexico, the concessions, they're ruined before we see them. There's a 5 or a 4 or a 3% royalty given away. On this one, we still have the full intact royalty. And on our sale to Agnico, the one I told you about, this was the exact same thing we did 4 years ago, guys. We went and bought another, this was a public company I bought in 17. They had that asset. I bought them for 12 million. 2 years before that, we bought a company called Animus. We paid 9 million for that. We spent 9 million on it. We sold it 2 years later to Agnico Eagle after we drilled off a 1 million ounce resource. But we got 20 million for that royalty. I still have that royalty intact on this. That'll be of great value to us going forward.
Matt Griffin, gold and silver in Mexico. Have you got a question here for Alan? For Glenn.
I do. Thanks, Glenn. You and your team have obviously got a great pedigree in the region, finding deposits and then selling them to majors. Just interested if that's the strategy with this one as well, and if so, what's the right point to explore a sale?
You know, here's and that's a beautiful question. I should have talked to this earlier. I've got a good friend, my partner, who's been with me for 25 years in Mexico, who's really taught me. Well, I'm just the securities lawyer. I just build the companies and help raise the money. Was Brad Langell, and he told me one thing. He said, Glenn, in Mexico, we can control one thing. We can build a mine. We can't control anybody's boardroom. And if you go in there thinking you have to sell it, you're in big trouble. So look at our history. 3 we built, 2 we sold to majors, the last one to Agnico. You do everything the same. Corporates don't buy drill holes. They buy ounces, move to economics. So what we're going to do is we're going to drill off ounces and we're going to move them to economics. And if no one wants to buy it, we'll build it. And you know, it's a question for your shareholders, like the Agnico deal. At what point is it just better at that point to take the money than to raise the next 50, 100 million bucks to build the mine? So that will come, but you have to go in and do all the work as though you're going to build that mine, or it's very difficult if you don't.
Very good.
Fantastic. Wow, the questions, they were tough ones, and I think all our speakers have handled that brilliantly today. Now the moment of truth. You know, we're going to talk Canada, or Brazil, the Yukon, or mighty Mexico. Let's go to our judges. I'm going to put the hard word on you about who's going to get your virtual million. Okay, John Forwood, who gets the money and why? Sorry, mate, I put you under too much pressure here, but haven't I? Yeah.
Sorry.
You there,
yeah,
John?
sorry. Very, very tough call. In reality, you know, we might go and put, you know, spend that $1 million amongst the whole 4 of them, because some really good stories. Yeah. I think, you know, the fact that they're all well funded, that's a real positive and a, you know, reflection of that we've had a pretty good market in 2020. You know, one of my you know, favorite things is to see hurt money by the management put into companies, and I think probably the 2 that sort of made that point the best were Silver Tiger and Cabral. So then it comes down to you know, the resource and the upside for us, I think, and you know, both of those tough calls, but I think, you know, the fact that yeah, Alan Carter, you know, he made that point, you know, very well, that, you know, the potential down there in Brazil is huge, you know, 5 million plus ounces. Yeah, I think, you know, the guys at Cabral might get our virtual 1 million.
Wow, that's a good call. But what exactly is so 4 great stories. So thanks for that, John. Daniel Rickleman, who got the money and why?
Like John said, I think there's not a bad company in the bunch, and it's all great to see that everyone's cashed up, they're moving forward, no one's standing still, but they also have a base to stand on as well that puts them in a good position. So it's not just a purely kind of alpha play in that sense. So yeah, I'd be very comfortable having money in any of these companies. A Silver Tiger sounds great, but I don't know anything about silver, admittedly, so that's on me. Brazil, I think there's a lot of potential there. I guess my only concern would be what's the focus? It's a huge area, there's a lot of mineralization. How is it going to hang together? what's the real project there. I think that'll be clear, but maybe not in the nearer term, maybe longer term. And how does it compare to Eldorado's project that's been there for some time? I think Banyan and Cassiar are kind of equal first for me. Banyan, I think, have got a lot of upside in terms of what they're going to release in the coming resource update, and if the grade hangs in there and those shallow depths and equal to the other projects in the area, I think they've got a lot of potential. Cassiar is nice in that they have the low grade close near surface bulk tonnage, but they've also got that high grade option, which could turn up some really interesting big news in the near term. So yeah, I like Banyan and Cassiar.
Come on, pick one. Come on, I'm going to put the acid on you.
Banyan.
Well done. Good on you. Gee, I tell you, it's tight though. 4 great stories. Yeah. Matthew Griffin, who won the day?
Yeah, thanks, Richard. Like you say, 4 very good presentations, all with good news flow to come, fully funded drill programs. So very exciting period for all these companies. I think, as Daniel said, I'm also actually not much of a silver expert, so that probably rules out Silver Tiger, despite sounding like a very exciting play down there. So for me, the $1 million will go to Cassiar. I just think a good existing resource, good to see existing infrastructure and a mill on site there, which would probably accelerate any sort of timeline to production. And I think the high grade sounds very exciting if they manage to get any hits there that provides huge upside. So that's where my $1 million would go, Richard.
How important is news flow to you then, Matt?
I think at the junior end, when you're sort of sub $100 million market cap, it is quite important. You do find that a lot of the retail investors kind of move around and people do get bored if there isn't news flow. So for us in our fund, we're typically more advanced projects, so probably less news flow focused. But I think at this area of the market, it is very important.
Yeah. And yeah, silver isn't so much in play in Australia, so not quite our cup of tea. But yeah, well, that could all change. That could all change. Thanks for that. Well, we've got 1 vote to Cabral, 1 for Banyan, 1 for Cassiar. My goodness, it's getting tight here. Angelina, which way are you going to throw your $1 million?
Yeah, I love doing these pitch battles, and at least this time, all the companies are precious metals. I think last time it was really apples to oranges for me, so much more difficult to compare. Again, 4 stories, all great. I like to look at this from the perspective of what kind of investor am I and what am I going to get for my $1 million. Some of you clearly don't need me, Silver Tiger, so not to push you aside, but frankly, I think my $1 million will be best served in Brazil. I like the risk reward profile there. I like the team. Say hi to Adrian for me, Alan. I think that you have neighbors that are going to be watching you, and that will be great exit potential for me as an investor. And what you said about the Canadian dollar and how far it can go and how it's amplified right now with the conditions there economically, that's where my money's going.
Wow, there we go. Cabral gets its nose in front then. Angelina, if I could just ask then, I mean, how important is it for companies who are coming in to present to you to let you know the exit strategy there, or do you work that out yourself?
Well, I'm a banker, right? So I'm very transactional. That's what I'm looking at.
Oh my.
I think that says it all. Okay, finally, we're coming down to Matt Zabloski here from Delbrook. Matt, look, I don't know which way you're going to go, but I think there's going to be Glenn is going to be a little bit disappointed. He was pitching hard there too, and he, it's been a tough battle. No, Matt, let's have it. Who gets your mill?
Yeah, look, Richard, like when we look at these call it 250, 500 million market cap Explorcos, for me, it's, they all check the right boxes, right? They all have what would appear to be, top quartile type projects, good upside potential. But what we're always looking for is simply optionality. I can't read the geology directly in this short of an amount of time. I'll go back to what some of the other panelists said. Something we'd love to see is insider ownership. To us, that really speaks directly to us. We're putting our money up, so why not put up your own money? Based on the optionality, based on what I like, which is probably gold over silver, my vote, my money has to go to Alan at Cabral.
Well, that's geez, Alan, you've scooped the pool there. You know, three out of 5. Alan, you still on the line there? What do you think? You've got the money, mate. What do you think? What did you do right? What did you say? You know, to get over the line there.
Well, I can say I wish it wasn't virtual, Richard. It would be nice if it was actually real money. But look, thanks very much. I mean, you know, we think we've got something pretty special here. There was 2 million ounces of gold washed from the streams during that gold rush, and this was all informal mining 40 years ago. And a friend of mine actually was active at that time, a guy who lives in Brazil. And I said, so what do you reckon you recovered from that sand and that gravel back then? And he said, well, we washed it a few times, but, you know, it's all sluice boxes. And he said, probably about 50%. So if they recovered 50, you know, there's another 2 million ounces just in the sand and gravel probably there. So, it's a district, Richard. It's exciting.
Thank you very much for that. And now we're coming up the top of the hour. I want to thank our judges after I've congratulated Alan, of course. So our judges today, Matt Griffin from AMP Capital, Daniel Rickleman for Zhaojin International, Angelina Mehta from Laurentian Bank Securities, our banker. We had Matthew Zabloski from Delbrook Capital, and of course, John Ford from Lowell Resources Fund Management. And thank you to our presenters today, Marco Roque, Alan Carter, the winner, Tara Christie, great pitch there, and Glenn Jessome. Glenn, you would have got my money, mate, you know, but I didn't get a vote. Thank you all. Thank you, Minds and Money. What a great pitch battle, and congratulations to...
That's it.